TV18's Nisha Podar and Nigel D'Souza caught up with Sanjeev Gupta, the MD of Liberty House. Take a look.
All right, we have with us, joining us live and exclusive, Mr. Sanjeev Gupta, who's the founder of Liberty House. Liberty House, remember, is interested in buying out some of the assets of Tata Steel Europe. Let's take it straight across to the man of the moment, Mr. Gupta. Good to have you on CNBC TV18. Could you tell us in what particular assets are you in talks with Tata Steel Europe to buy them out, and why your particular interest, especially at a time when steel industry is not doing that well?
So we are interested in their all the strip businesses, which means Port Talbot and all the downstream businesses which Port Talbot supplies.
Mr. Gupta, wanted to understand that Scunthorpe has also been on the block. Of course, Greybull Capital is in advanced talks to buy that one out. Is that also on your radar, or is just Port Talbot at this point and the peripheral ones like the specialty and other such units that are close to Port Talbot?
The long as it's in advanced stages with Greybull, so that is certainly not on our agenda at the moment.
Right. And of course, there has been a lot of to and fro with the UK government as well. What all meetings have you already had with this regard, and at what stage is this particular deal process?
It is at a rather preliminary stage. We have had meetings with the UK government and the Welsh government, and their support has been solid. They are committed to finding a solution to the sale of these assets on a viable, ongoing basis. But the situation where we are at is that we now need to engage with Tata, and the actual formal sale process needs to begin. We then need to do our due diligence and then come up with a detailed business plan before we submit our pitch.
Right. Mr. Gupta, can I also know what could be the cash transaction in this kind of a deal? Because we know that Port Talbot is a bone of contention. It is a problem unit for Tata Steel, and steel industry on the whole is not doing that well in Europe, and it is a loss-making unit. So would you be taking over a part of the debt, or would you be taking over the losses? And what kind of a transaction could this be? Because you will probably have to also spend some for that unit to come up to speed and to reach its utilization going forward as well.
Transaction shape is not clear at all at this stage. As I said, once the engagement process starts and we do our due diligence, then we will negotiate on what the shape of the transaction should be. But as you say correctly, it's a loss-making business, so our focus will be on how to turn it around and what resources are required for the turnaround.
All right. Hi, Mr. Gupta. I'm Nigel here, Senior Research Analyst, and I track the metal stocks very, very closely. I was just looking at the financials of the UK business on the whole. We have a big negative number in terms of the EBITDA of around $250 million. The capex as well is nearly around $200 million. Have you done any kind of math in terms of what was the EBITDA loss only of Port Talbot, as well as what is the capex that's required for the upcoming financial years?
The capex requirements will change quite dramatically based on our plan, because we will not be doing this, we will not be undertaking this investment if it is based on existing plans. That existing plans, if it was only a question of making those work, would have worked by now. Tata has been spending a lot of money over a long period of time trying to make this work. So we want to remodel this into a new business plan altogether. And the capex required for that has to be examined. We need to go in and we need to put together a detailed plan working out how much it will take, over what time frame. We want to, as I've stated previously, we want to transition from blast furnaces to arc furnaces. So we need to work out what that capex is and how long it takes and so on. And based on that, we will then put together a proposal.
All right, Mr. Gupta, but as per what reports suggest, they're suggesting that to do this kind of revamp, it'll cost close to around $1 billion as well. Could you confirm what kind of capex are you guiding just to take this entire revamp forward? And also, the same plant, I think it was just refurbished by the Tata. So you're not interested in continuing with the way it was functioning at all?
That's precisely what I'm saying. Whatever plans or projections you are talking about are not relevant to us. We have to come up with our own plans, which is to change this system of making steel from a primary steel producer to a secondary steel producer. That is our proposition. Our proposal, our bid will be based on that proposition.
All right, that was the exclusive that we had from the man who could be buying